Welcome back to the Market Day Report. And as Tim promised, we're going to dive on in and see what's going on in the grain markets as well as the livestock markets. And we had some downside action Monday to get the week started. So let's check in with Brian Hoops. He is based out of Springfield, Missouri, and he will have the latest. Of course, Brian is with Midwest Market Solutions. And Brian, what is your take as we have day 2 for the week underway?
Well, we're trying to see a pretty good rally here in the cattle market. The grains are under a little bit of pressure. We've had a lot of rain in the western part of Iowa, some locations reporting anywhere from 4 to 9 inches of rain. So it's really restoring the soil moisture profile, and it leaves traders wondering what is the one thing that could give us a rally in the corn and soybean markets. We're not getting really any bullish news out of the Pro Farmer Tour. A lot of people were hoping we get some news, maybe some disaster type yields, but they're not finding that, and that's not giving us a reason to rally. Rains are going to help out the soybean and the corn crop as far as filling, and the threat of frost is pushed back until about September 5th or 6th or so, and that's when we'll have a full moon. That's the best chance we'd have of a frost, but right now the temperatures are expected to be in the 30 degrees for most of the corn belt, with maybe some freezing temperatures just in the northern part of Minnesota and Wisconsin.
Brian, you seem to be echoing some of the thoughts that I came across this morning from some other traders and analysts. In fact, that the corn market is pretty much dependent on the weather right now, and that's really the only thing it's got to go on.
Yeah, I was talking with some clients this morning about how low this corn market could go. And, last year we bottomed at about August the 31st, and there's the same phenomenon that's happening this year as what we saw last year. A lot of old crop corn is going to be sold right at that time frame. A lot of elevators that are holding corn in storage are giving producers as a September 1 deadline. You either have to make some sales or it gets sold for you. And we saw the low in corn actually put in on the 31st last year. We could easily see that happen again this year. There's a lot of old crop that's still needing to be moved. It's in producers' hands in elevator storage, and so it's going to come to market here in the next week, and that hopefully puts in the low, and we could see a post August into September type of rally as harvest begins.
Now, Brian, you mentioned the Midwest crop tour that's underway. Of course, as you said, no big surprises yet as far as corn's concerned. As for soybeans, for this tour, they don't actually give a yield estimate for beans because there's so much more potential that can happen between now and when the crop's actually harvested. What is your take on what you're hearing as far as beans are concerned so far, though?
Right now, the tour is kind of summing up. There's nothing really impressive out there, but there's not any disasters out there either. The soybean crop certainly going to be made in the month of August, so a lot of moisture should equal a good yielding soybean crop. And there's a lot of potential, is what the tour is finding. Is there's a lot of potential for pods out there, and this rain that has been moving through some of the drier areas is really a godsend. It's really going to help out that soybean pod fill.
And Brian, what are your thoughts as far as the wheat market is concerned? Of course, it's been seeing significant downside action as well, with Minneapolis typically leading that downside move.
Yeah, it's a kind of a real train wreck. You go back to just early part of July where we were sharply higher. Now we're sharply lower. We've lost a lot of ground in a very short period of time. And, we went from a supply-driven type market in June and early July to now we're looking at demand. That's going to have to get rid of the big old crop supplies that we have of winter wheat. We just don't have enough demand. The last few Egyptian tenders have shut out the U.S. as far as any wheat business, and that is not a good scenario for us. We've got to find a price level that's going to stimulate some demand.
Okay, Brian. Well, if you'll hold on for just a moment, we're going to go over the livestock markets here in just a minute. Again, talking with Brian Hoops out of Springfield, Missouri. Now, before we turn our attention to the livestock markets, let's take a look at the Board of Trade, see what's taking place as far as the corn market is concerned. We've got September down 3/4 cents at 3.48 1/4. December new crop down a penny. That's at 3.62. Over into the soybean complex, the nearby September contract up 1 3/4. That's at 9.34 1/4. November up 2 1/4 at 9.38 1/2 cents. So although we see some upside movement on soybeans, still a very narrow trading range for what we've seen over the last couple of trading sessions, needless to say. Over into the wheat complex, of course, starting things off in Chicago at the CME Group. We've got September down 3 1/2 at 4.06. December Chicago wheat down 4 1/2 at 4.32 1/2 penny. Kansas City down 4 3/4 on September at 4.03. December down a nickel now at 4.30 3/4. And Minneapolis, which is the market that has seen the biggest swings as of late, it's the narrow one today. September unchanged unchanged at 6.55. December down a quarter cent at 6.68 3/4, and March Minneapolis wheat up a quarter penny at 6.69 3/4 cents. Well, stay with us. We're going to check back with Brian here again in just a moment. We'll turn our attention over to the livestock markets right here on your Market Day Report. Well, as promised, we continue our march through the commodity markets, this time turning our attention over to the livestock complex. And we are joined once again by Brian Hoops. Brian is based in Springfield, Missouri. And Brian, you and I chatting here a little bit off camera, and it sounds like consolidation is the key phrase so far for the Monday and Tuesday that we're covering so far this week.
Yeah, exactly. In the cattle market, we consolidated yesterday, an inside day, meaning we traded within the range of the previous day in a lot of the live cattle and a lot of the feeder cattle markets. And that was kind of a suggestion to the market that maybe the market has consolidated at the price level that it's at and was going to take a different direction. And that's what we're seeing today, a big technical rebound going on in the live and the feeder cattle markets. I don't think anything fundamentally has changed. We have a cattle on feed report coming out on Friday. Placement numbers expected to be about 106% of last year, and this, if that happens, this would be the fourth consecutive month that placements have come in much larger than a year ago levels. And of course, back in the previous months, cattle on feed numbers, the placements were huge, a big jump of 116% compared to a year ago. So certainly a lot of cattle coming at the market. Technical rebounds like this, producers certainly encouraged to look at their bottom line and try and lock in some protection either through an option strategy or straight hedges on these rally attempts that we're seeing.
And as far as the lean hog complex and the hog market in general, what's taking place there?
Well, we talked about consolidation in the cattle, and now we're starting to see a little consolidation in the hogs, the same thing, an inside trading session. We're on some very strong technical support around that 64.50 area. If this area holds, I think you could see a bounce similar to what we're seeing in the cattle. Should see that in tomorrow's trade. The hog market likely to try and see a recovery, especially with seasonals turning higher at the end of the month.
Now, I came across something that said that talking about the hog market, maybe looking somewhat for a downside, but that downside opportunity might be a bit limited as far as lean hogs are concerned.
Yeah, absolutely. I think so. You've got the lean hog index, which is what the cash markets are tied to, and it's about $20 more than where the October board is right now. And so it's a very similar situation that we saw in the live and feeder cattle earlier this spring, where the cash market had already anticipated a drop in the cash, and those futures too heavily discounted. I think the right now October, December futures in the hogs too heavily discounted to where the current cash is and should have a recovery.
All right. Well, Brian, thank you very much for taking the time to chat with us today. We certainly appreciate it. Again, talking with Brian Hoops. Brian is based out of Springfield, Missouri, and he is with Midwest Market Solutions. Now, before we wrap up, let's take a quick gander at the live cattle trade at the CME Group in Chicago. We've got August up $1 at 107, October up $1.70. That's at 107.55. Into the feeder cattle complex, August up $2.30 at 142.10. September up $2.90. That's at 142.05. October up $2.90 at 142.42. And wrapping things up at the lean hog complex, October down 18 pennies at 64.5, and December down 37 cents at 59.48. So some mixed activity taking place over on the cattle and livestock side of things.
Okay, we'll see how the day plays out. Thank you,
right.
Markets Editor Janet Atkinson.